Hi, welcome to this special webcast, and we're going to be going over some trade analysis, and we'll start with Home Depot. Here we see he or she purchased it on November 19th, which is the arrow over here, and the entry price was 125.87, went long, and the reason for the trade was he said it broke above resistance. Okay, and I'm assuming he was looking, or he or she. I'll just keep on saying he just as easily. It could have been a she. Noticed that I'm assuming this is the resistance area, and he was also looking at the bottom of the window on November 17th. So over here, he was looking for a support area, and his target was 135. All right, and the step out level was 123, and that's probably a little bit under the window over here because the support starts here all the way down to this level. So he's still long. So nice trade. The analysis is, I think it's a good trade. See, this is a small real body, and normally we talk about being cautious on a small real body, but notice how you had a long lower shadow, right, which is a bullish scenario. And this is why this is a hanging man. This is why a hanging man is one of my least favorite candlestick signals, because the hanging man has a long lower shadow, which is bullish. So for a hanging man, you really need bearish confirmation by a close lower the next session, which did not occur here. So anyway, so I started to say small real body, but normally it's a cautionary signal. But notice it's a new high close, and it's above a prior resistance area. This is a momentum trade, which I like momentum trading when you're breaking above a resistance area. So this was a nice trade. I think he had a really good stop, good risk reward. Obviously, no way to predict the market's going to move this quickly. So getting very close to his target of 135, getting a little bit overbought, but nonetheless, no bearish candlestick signals yet. Okay, on this one, pound dollar. Okay, did the trade on November 22nd at 152.45. So that's right. It was on this day, so it was right around over here. And he went short, and he said the market made, not sure what LL is, but and I don't have a Fibonacci on here, but he's talking about a pullback to Fibonacci. But from the candlestick perspective, he did have a bearish engulfing pattern over here. Okay, and the stop was a good stop, I think, 153.55. So it was above the recent high, and it was above the round number, and he has a target of around 150.25. So a little above the lows over here. And we didn't quite get there yet today. I made this chart as of a few hours ago, so we may actually be down at his target, not sure. And he's still in the trade. So from the perspective, he did get it at 152.45 over here, and that's an okay trade. All right, because you really don't know it's a bearish engulfing pattern until the end of the day. But by doing it over here, and your stop is here, and your target's down there, that's a good risk reward. See, if he waited until the end of the session and did the trade over here a little under 152, think about what that does to the risk reward, right? If you're selling it here and your stop is here and your target is here, that's it's close to a 1-to-1 risk reward. So in that case, it really wouldn't be a great trade. But by doing it just as it was making a bearish engulfing pattern over here, okay, that trade did have an acceptable risk reward in my opinion. And by the way, I have Bollinger Bands on here. Okay, this is what I look at. I look at a 20-day moving average, simple moving average, and a 50-day moving average. And that's how I determine the intermediate term trend. If the 20 is below the 50-day moving average, the intermediate term trend is down. So he's going short in what I see as a downtrend, which is good, and good target. Right, we're near the recent low. Okay, on SPX, he did a call, and I'm not going to be looking at this from a options perspective because I'm not going to be looking at implied volatility or the strike price. I'm just doing it from pure price action. So on October 27th, which is over here, he entered at, this is the price of the call. Okay, so this is where he did the trade based on the price. Now here we're talking about a little hanging man. This is, it says following the minus HM. Minus HM, that's a Nison candle scanner, which I don't have here. It picks up hanging man lines and my favorite candlestick, and my other candlestick signals. Again, hanging man line I don't place too much emphasis on. I really want to see bearish confirmation, but this is, he didn't use candle scanning because the hanging man over here, see, this wasn't hanging man, this was more a hanging man. And note, remember what I said, it needs to be confirmed. The hanging man here needs to be confirmed by a lower close, and notice what happened, it didn't close lower. So any potential bearish implications of the hanging man here are completely voided because of the rally. But anyway, it came close to the rising window. This is a small rising window, which I really like. Tight windows mean tight support. So I don't have the 200-day moving average. He was talking about the 200-day moving average. I have my moving averages, so I'm assuming when he talked about the 200-day, he was close to his, the moving average. But the point is here, it held support very nicely at the rising window, and he had a price target of 21.20. Okay, we didn't quite get there. We're actually in a bearish engulfing pattern, but he exited over here. Sorry, he exited on November 2nd. Probably did it because we got close enough to his 21.20 target. And also with a call, obviously you have time value, and a long call, you have time value working against you. So you have to be pretty quick on taking some profits. And so he exited over here. And we did have a bearish engulfing pattern here, which got him nervous, I guess. See, minus E is a bearish engulfing pattern over here. And the market did get above it, but it was close to his target. So the main thing is here, I like the tight support area. Long-term uptrend, 20 is above the 50-day moving average. So you're buying in a long-term an intermediate term trend early. Okay, here on this one, he went long on November 4th, so that's over here. And he just said he believed the stock was breaking out, and actually broke out on this session over here. See this resistance over here? And the market closed above it. Okay, he had a stop at around $35 here. And he got stopped out on this bearish engulfing pattern over here. And why would we not go long in this trade? Remember, this trading analysis is not only talking about things that I think that trader has done correctly, but things that maybe we could learn from, some mistakes. What's wrong with buying it over here? All right, you're buying right at a resistance area, right? I'd rather buy in a breakout than resistance. But he got problems, right? He had some problems with the doji at the resistance, and then, but was good about it, he did use his stop. He did get stopped out. He didn't change his mind. The market sold off after that. It did rally, but the point is, whenever you do a trade, you should always have a protective stop. Okay, and Damien wants to know, the breakout would be on a close above the long shadow. So it would be a close above here. See how the market got above this resistance, but didn't close above it? I really like to see a close above it. So right now this market is kind of in a box range, top end and the bottom end of the box range. Okay, on November 3rd, he went long at $32 on this day. And he went long at 32, which is where my arrow is at. The red arrow just means the day he went long, but the actual price I see is 32, so that's where my pointer is at. So I personally would not be doing that, unless you feel that the market's going to break above resistance. But if here's 32, right? So you're actually buying at resistance. That's a trade I would not do. I would prefer to wait for a close above resistance over here, which it did do. Okay, he went long the calls. Again, I'm not looking at this from a option pricing perspective. I'm looking at this from a price action perspective. And so he bought a 32. He said it broke out of a bullish rectangle on November 2nd. So I guess by the end of the day, he means that it did break above resistance by the end of the day. And he did see the morning star over here. Okay, it didn't help much with his trade because he bought it here, but he was right about this morning star. And he had a target of 39.80, and he had a stop below the morning star. So it's a good risk reward. He was risking quite a bit, $3, but he was looking to make $6 or so. And he's still in the trade. My feeling, and I guess he 29.47, he might have gotten stopped out over here, right? Because the stop was on 29.47. Personally, I would have a stop probably under here, which is probably under 29.25 or something like that. But anyway, if he was long here, this was a bearish signal. It was a dark cloud cover, or almost a dark cloud cover, but it's also a falling off the roof. The market broke above resistance over here and couldn't hold above it. And when you have a falling off the roof, the target is the most recent low. So if he was long here and he was optimistic here, on this day he should have adjusted his position and either lighten it up or get out, because this was a bearish signal with a target to down here. And in fact, look what happened. This actually would have been a good bear trade. Could have sold it here once the market broke under resistance. Stop here, and your target is the most recent low, which is over here. So the breakout was right, but what was wrong is not adapting to the market. You should have really adapted to the market on this bearish signal here. Okay, went long 2 times over here and over here. And I'm not sure why he went long here. He went long over here on the 18th of May on the pullback with the hammer, so that's perfectly fine to go long over here. And what was nice also is that this hammer, notice it held support over here. So my target, let's see, he didn't have a price target. He really should have had a price target, but my target would have been, although there's resistance at the window here with this hammer, my target would have been over here to over here. So from a risk reward, it probably was not a good trade because your risk is down here. Okay, you're buying it here. Your risk is here. If you're buying it here and your target is here, it's about a 1-to-1 risk reward. So that's a trade I'd probably stay away from. Okay, something like this is different. If you bought on this hammer, the stop was over here. So you would buy here, stop was under 30, and the target would be here. That would be a good risk reward. So you can see you have 2 hammers, but how you trade with them is very different dependent on the risk reward. Oops, let's look at a few more. Okay, we got a lot of requests, but unfortunately most did not have the information like here. They didn't give the entry price, they didn't give the reason for going long or short, they didn't have stop out levels. So The vast majority, unfortunately, I could not use for trade analysis. Okay, and we're not doing live markets. Ken, if you're a member of mycountercharts.com, we do live markets each Monday and Thursday night. So if you're a member, just you could ask when we do the strategy session tomorrow night. If you're not currently a member of the member site, contact Paul at countercharts.com. Okay, here's some trades we've done. Okay, here we have LB and went long on November 19th at 92.13. All right, and there 96.50 is a target, and that's because it's right around here. Well, actually, the top of the falling window is right around 96, and then you have resistance at the 100 area. Initially, the stop was the low of November 17th. Okay, and the market rallied and took some partial profits on November 24th, which was today, since we hit the initial target. And then we'll look at psychological levels like the 100. And what we'll do is we'll also raise stops. We all have our own trading style, Sil, me, myself, and Paul. So here the stop was below 92.40, just raising a trailing stop, and that's below the low of actually today's low, below November 24th, 94.20. Okay, on Facebook, okay, went long over here, 104.30. There was a hammer. And this hammer was nice. See this tiny window? Remember what I said before about big windows? How we like, small windows? These tiny windows are great. See how it held small window here, and see how it held the support on the hammer. So we got bullish confirmation on the hammer. And so we went long. We had a target of 109, which was, right around the highs over here with this high wave doji. And a lot of times the middle of the hammer's lower shadow would become support. So the stop was under the middle of the lower shadow of the hammer over here. And we had a trailing stop triggered over here. One of the trailing stops we'll use is we'll look at the lows. And notice each day has a higher low. So this day over here had a lower low. And that was our trailing stop. So we exited over there. So it's a short-term trade. Okay, bond futures. Okay, went long here, right around 150, 152. A bullish engulfing pattern right over here. Confirming support at another bullish engulfing pattern. This is something we really like. That we have a candlestick signal confirming support or resistance, and in this case support is based on a bullish engulfing pattern and another bullish engulfing pattern over here. There's actually a trade Sil did. I don't have the Keltner channel on here, but that's one of the things he likes. For those of you who attended last week's webcast, Sil discussed the Keltner channel, or the weekend before I should say, and also the lower end of the Bollinger Band, which tells us the market got oversold. And he had a stop under 151, which is under the lows here, protective stop. And he had a price target. I'm not sure, how Sil got the target, but his price target was 155, and we reached the target today. But the main thrust with this is that we had a candlestick signal confirming a support area, and even if we, there's the bullish engulfing pattern, but even before that, see the trade actually that was done was on this doji session. So that was telling us, even with the small real body, that was telling us the bearish momentum was running out of steam right at a support area. Low risk. This is a relatively low risk trade from a technical perspective, because if you're buying it here and your stop is over here, that's a really nice low risk trade. Okay, we'll do a couple more. Okay, entered over here. We have a hammer right at a support area. Okay, this is also bullhotomy. Okay, but we were focusing on the hammer at support and a protective stop under at 60.50 right over here. Okay, actually under the lows here, and a target of 69. Now with something like this, it all depends on your trading style. Normally we have a stop under the low of the hammer, so that's where 60.50 comes in. If you're willing to risk a little bit more, maybe another half a dollar or so, one could have a stop under here under the $60 level. So it all depends on your trading style. And as the market moved up, we had a trailing stop, and so we have the price target of 69, which was reached. Okay, and the next target, interestingly, is this falling window. We're now at this resistance area. So although the market's at resistance, there's no bearish candlestick signals yet. And what should happen now is this old resistance right around 69 should become a support level. Okay, in red hat, okay, classic bullish engulfing pattern. There's an hourly chart. Okay, it's also a bull sash. A bull sash is when the market, it's a white candle. You have a black wheel body. The opening is about the same as the prior opening, and then you keep on going stronger on the white candle. But this is almost a classic bullish engulfing pattern. Not quite, because the white candle didn't wrap around the black wheel body, but this is certainly close enough for me to call it a bullish engulfing pattern. And look at this. Again, at a support area. And so we have a candle signal confirming support, entered at 76.50, which is over here. This is the day of the trade, or the hour of the trade, but the trade was actually over here. And the target was right around the recent highs here. Okay, the major highs right around 79. So good risk reward. The stop was under 75 over here. And market's been moving up, and so we reached the target of 79 a couple of days ago. Okay, so that wraps it up for the recap. I want to thank you for joining me, and be sure, I just want to kind of give you a heads up to check your email about a special sale that we're going to have in the next couple of days. Really great bonuses and really great pricing. So with that, I want to thanks for joining me, and I hope you have a good day. We'll do these from time to time. Okay, thanks everybody. Have a great rest of the day.